On the night of the 10th of May, 1861, a mysterious spark, fanned by a warm southern foehn wind, started a merciless fire that swept through the emerging industrial town of Glarus in Switzerland. By the next morning, every second person was homeless, and the damage amounted to 9.7 million Swiss francs. As news of the incident spread around the world, and the Swiss helped the people of Glarus to rebuild their lives, the idea of Swiss Re took shape, and the company was founded because the future was clearly written. Industrialization and economic growth would mean more and more people living closer together with more to lose, resulting in an ever-increasing need for insurance cover.
Industrialization has also led to more and more companies trading with each other, and to the growth of financing needs. Our origins and founding visions continue and are exemplified by our support for global trade and finance around the world. Our trade finance team is here for you. Trade finance together.
My name is Dipesh Patel, editor at Trade Finance Global. It's a hilly ride for global trade finance right now, but it's a rockier ride for trade credit insurance. Trade credit insurance in this context is credit risk political insurance or non-payment insurance, and it's said to underpin global trade. Banks and corporates use the instruments for risk mitigation, capital relief, and distribution. But how does it actually work, and why is it used? And what are the big market updates for the CPRI industry? Today, I'm delighted to be joined by Swiss Re's Basil Louvaris, Trade Finance North America's geographical lead at Swiss Re. Welcome, Basil, to Trade Finance Talks TV.
Welcome, and thank you, Dipesh, for inviting me onto the broadcast. Much appreciated.
Such a pleasure. And to get started, could you give us a quick introduction? Who are you, where are you from, and what do you do?
Sure. So, my name is Basil Louvaris, and I joined Swiss Re 6 months ago as the geographical lead to launch the trade finance solutions into the Americas, including Canada. Previously, I was at other multinational global lead insurers, and the opportunity arose to lead the solutions for Swiss Re, a major global reinsurer into the US. So I'm very welcome and happy to be on the show.
Thanks, Basil. And I guess our viewers have just seen the Swiss Re Corporate Solutions video. Could you tell us a little bit more about Swiss Re Corporate Solutions?
Sure. So Swiss Re Corporate Solutions is the commercial insurance arm for the Swiss Re Group, basically providing customized commercial insurance solutions. Within Swiss Re Corporate Solutions, there are various underwriting divisions, of which one of them is the credit and surety arm, and that sits within Swiss Re Corporate Solutions. Credit and surety encompasses 5 products, basically being the political risk, project and infrastructure, commodity trade finance, surety, as well as the trade finance group. And within our primary focus for the trade finance group is that we are very much a broker-driven market, providing solutions to both all of our specialists and non-specialist brokers.
Thanks, Basil. So why do financial institutions purchase credit insurance in the first place?
So there's multiple reasons why they would purchase credit insurance. Firstly, that's for capital relief purposes. This enables the financial institutions to effectively meet their regulatory and capital requirements. Additionally, they are able to manage their internal limits, not only country, but also obligor limits. Because just like the insurance companies, the banks also have their internal counterparty limits that they have. And alternatively, additionally, we are looked at as an alternative to distributing into the secondary bank market. So the insurance companies are considered more of a friendly solution, or in essence, for the banks, we would be a silent partner because we're not competing against the banks.
Sure, and I guess given your recent expansion into the US market, I guess a question around the need. What market need did you see? And also what differentials are you bringing to your corporate customers in the US?
Sure. So basically, this was to ensure we have a presence where our global banks and brokers need us. In the US, not only are we supporting the US banks, but then also the European banks that have got branches and subsidiaries here in the US. So we have relationships with these European banks in Asia and in London, and we want to be able to support them as well as the brokers here in the US. So in essence, to further enhance and develop that global relationship with our clients. On the ground, we have got seasoned trade finance professionals who have decision-making authority. So we're able to provide our clients with we'll be able to be responsive and be proactive and provide them with responses as needed. Additionally, we offer our FI clients AA- rated S&P insurance carrier paper, which for capital relief purposes is something that the banks are required.
Thanks, Basil. And I guess I'd like to ask if you can go into a bit more detail. So how will you actually be solving those problems for your customers?
That's a good question. So really what we're focusing on two aspects. It's basically our corporate obligor cover as well as our financial obligor cover. So from a corporate obligor cover, this really covers trade loans, payables and receivable type of structures. So really, if I look at the trade loan kind of program, that would be, a bank would be extending a loan, whether it's typically for trade related purposes. And then that loan would be repayable over maybe 12, 24, 36 months. It might be an amortizing loan with various payments due every 6 months, or it could be a bullet payment at maturity. So we offer all sorts of different solutions when it comes to working with our customers. And then also for financial institution cover, again, that also includes trade loans, but also letters of credits as well as bank guarantees. More recently, we just added non-trade solutions. However, due to regulatory compliance reasons in the US, we are able to offer that to US clients, but that's managed out of Europe by our colleagues in Europe. And finally, really from a policy perspective, we can offer clients two kinds of insurance policies. One is the traditional non-payment policy, which includes terms, conditions, reps, warranties, and exclusions, as well as a limited conditionality trade insurance policy, which has fewer exclusions, but that product is more for clients that are retaining more skin in the game. So when I'm referring to skin in the game, really I'm talking about the co-insurance and how much the client is willing to hold uninsured for their own balance sheet, sort of unhedged as well.
Thanks, Basil. And how will you actually be bringing these to the US market?
So there's a couple of different solutions that we're going to be providing. So not only is it going to be single name structures where we're just insuring a single name corporate, but then also portfolios. So portfolios will typically be 15 to 20 named buyers within the program. Eventually, we hope to be able to build that up to a larger portfolio structure, but for the time being, that's kind of where our limitations for the time being. We also will be providing, or the structures are really going to be ground up policies, and in there are instances when we might even provide excess or top up cover where we are ensuring excess of a deductible. The distribution channel is really at the moment via our specialist brokers, and that's really what we are focusing on for our FI clients in providing support to the specialists as well as the non-specialist brokers. In the future, we hope to be able to expand into the trade credit space, whereby we would be insuring corporate insureds. But for the time being, our main focus or our focus is or are the FI clients.
Thanks, Basil. Yeah, I guess clear focus for the FI clients as you start this North American strategy, but we'll be really excited to talk to you as you develop the trade credit product for corporates as well. Basil, thank you very much for a really comprehensive overview of the CPRI market, a little bit around Swiss Re Corporate Solutions and what you're offering. Really looking forward to hearing more from you. Thank you very much for joining on Trade Finance Talks TV.
Perfect. Thank you very much, Depeche. Appreciate the opportunity.